Hi everyone, we're here at Emergence 2025 Investment Conference here at Four Seasons Hotel Sydney. And joining me here today is Brett Craig, Director of Private Credit at Aura Group. He's also our keynote speaker for today here at Emergence 2025. And so with your background at Macquarie Group and now as Director of Private Credit at Aura, how do you see private credit positioning itself against traditional investment vehicles in today's economic climate?
Thanks, Jade. So nice to be with you today and great to be at the Emergence Conference. Look, private credit's an asset class that's really grown fairly significantly in the Australian market over the last 3 years. But up until that point, it had been in a relatively nascent point. If you look globally, we've seen significant growth in private markets across US and Europe. We've been a little bit behind. So what I'd say with private credit, it's essentially any lending done outside of the banking sector. And in the US and Europe, we're seeing a much higher level of uptake than in Australia. So at the moment, 9% of lending in total is done in the private market. So you got 91% of lending is still done in public markets. In the US, that statistic's actually flipped. Now, if you look at the return profile versus a more public market asset, our funds have been performing exceptionally well, low volatility. Return profiles quite similar to our equities indices since we started our business. That's in our wholesale vehicle. But ultimately, we see private credit forming a component of one's portfolio where you're looking for income, where your objective should be around a more stable capital base as opposed to your growth assets. So we see it sitting alongside your traditional fixed income, but sort of a subsector that takes mark-to-market volatility out.
Okay, that's really an interesting take on there, and really Australia has a lot to catch up when it comes to private credit. Aura Group has a significant presence across Australia and Southeast Asia. How do regional differences impact your approach to private credit investments, and are there particular markets you're especially focused on for 2025?
Yeah, look, our current mandates are all set up to be very Australian-centric. So all of our lending is done in the Australian market. We do run a mandate that flows over to New Zealand, but our offshore focus is really on the investor side of things. So we're in the process of establishing a feeder fund up in Singapore at the moment, where we're going to put some currency hedges in Sing dollar and US dollar. So we're seeing some really solid interest coming out of the Asian markets for Australian private credit assets. But on the asset side of things, we are very Australian-centric in how we operate.
Okay, fantastic. But what about the role of technology, and now AI is becoming so hot? So we want to know, what role does technology play in your private credit strategy, especially as Aura aims to embrace technology as part of its vision?
Yeah, definitely. I mean, I think across Aura Group, we look at venture capital and private credit, PE investments as well. And, there's a fairly deep understanding of general technology out there. Our private credit business was set up with an initial focus on lenders who had been tech-enabled for credit assessment and I suppose all interactions with borrowers and portfolio maintenance. So we've always had an eye in the last 8.5 years on technology. Then as far as our team goes, we are heavy utilisers of technology with respect to portfolio management and also our risk management. So a lot of the tech that we're focused on is about assessing credit risk within portfolios and using, AI technology. I mean, back in the day, it was machine learning that we always looked at there. But technology plays a key role in what we do to increase efficiency, to get great borrower outcomes, and obviously to reduce risk for our investors.
Okay, that's really interesting, especially the technology part and the AI. And from your perspective, what are the most common misconceptions about private credit that sophisticated investors should reconsider?
Look, I think private credit's probably got some bad press recently. We had some findings or an outcome from ASIC that was released today, looking into transparency within the private credit sector. I think as a business, we've aimed to be at the forefront of transparency with respect to risk in a portfolio. So I think when investors are looking at private credit in general, I think return is one element. and should not be ignored, obviously. But the other thing is understanding the risk within an asset class, a risk within a particular fund, a risk within a particular asset. So you can understand that risk return balance and really work out whether you are getting, in fact, an outsized risk-adjusted return for your money. So what we're very much focused on is bringing risk analytics into market and risk disclosures into market that are in line with public assets. So bringing it into the methodologies that are used by the banks, by Standard & Poor's, Fitch, Moody's, to sort of put a benchmark on risk within an asset class. So I think investors need to focus on twofold: the risk and the return, not just a return with private credit.
Okay, that's really a good advice for sophisticated investors. And lastly, we want to know your experience here at Emergence 2025. How has been your experience here so far?
Look, I think Steve and the team always put on a really eclectic mix of businesses and investment options for wholesale investors in market. So it's been a positive one thus far. I've got to present later on. Let's see how well it's received.
Yeah, awesome. Of course, we're looking forward to that. And thank you so much, Brett, for granting us this quick chat. And to all our viewers, thank you so much for watching. And I look forward to seeing you in my next interviews.
Thanks all.
Thank
Thanks,
you,
Jade.
Brett.